Master your money, free your future. Welcome to Budget for Life. My name is Jeremy. I'm not a professional YouTuber. I am a financial advisor, but this video is not financial advice. I want to talk about a little deeper into GameStop's quarter three earnings projections and help you understand the gravity, the impact of these financials. What does this mean for the growth of GameStop? And I want to compare it even to Palantir, a very highly touted, right, the cream of the crop growth stock, a company that deserves a premium on its price to earnings valuations due to its high growth. I actually want to compare this to GameStop and help you understand the weight of what GameStop's underlying growth really means. Before I get into it, thank you, of course, to those who joined the channel as fans and friends. If you want access to my GameStop spreadsheet, thank you to the subscribers. We're on a march to 2525, the Halo Sub Club. Hopefully, we can get it this calendar year. Would love for you to be a part of it. So, GameStop's Q3. What do we know? We know that hardware is going to increase because the Switch 2 just came out, and we know that every console curve is an increasing sales curve for several years, the life cycle in terms of units sold of a console. And so the first quarter that the Switch 2 was available, quarter two, is not going to be the peak of Switch 2 sales. Absolutely not. And it wasn't even available the whole quarter. It was only available 2 months of the 3 months of quarter two. So we know that hardware is going to increase. Conservatively, I've put it at just a 10% increase quarter over quarter. Software, I projected as a 25% decline compared to the about 270 of revenue that they did in quarter three of last year. So I have a 25% decline in software here, despite the fact that Pokemon Z to A came out this quarter and Battlefield 6, FC 26, Borderlands 4, Super Mario Galaxy. And if we know with a pretty high clarity that, hey, the software likely is going to keep declining 25% year over year, and the Switch 2 is going to do what it is currently on track to do, and the weighted implication of that for Q4 during holiday sales is always a higher weight, then we know with a pretty high clarity that between hardware and software, you're going to see about a $3.4 billion revenue business in GameStop. And then you have the bombshell drop that Ryan Cohen offered us 3 weeks ago in an interview, which is that the collectibles will total just about a third of total revenue for this calendar year. How did that happen? Because in this quarter, quarter three, which we will get the numbers for in about a month, they started their Power Packs business. Power Packs beta went live, and that business is generating hundreds of millions of dollars necessarily for the collectibles business to end up with a $1.5 billion range, or maybe even 1.6, 1.7, to get to that just about a third weight of company sales. So, from a margin perspective, if you assume that they maintain similar margins that they've had historically on their new hardware sales, and then on their legacy hardware business, on their software business, on their legacy collectibles business, and then if you say they only make a 10% margin on their new Power Packs business, then you end up with $351 million of gross profit. You net out their SG&A, which is declining because they are closing stores rapidly. They've closed over 1,000 stores in 2025. Really, they've closed 500 and then they've tabled 500 that are listed for sale, some of their international stores. I'm going to say their non-store related SG&A increases by about 5 million. Maybe there's some extra corporate overhead related to their Power Packs business, since Power Packs is not really a store related business directly. Unless you're talking about physical Power Packs, which they do sell in stores. But right here we are talking about the digital Power Packs, which went live. All that to say, SG&A is a percentage of sales plummeting quarter over quarter, operating income erupting quarter over quarter, and still earning a bunch of interest income from their cash position and their Bitcoin position. Net income of $220 million. What does this mean? Right? This is, to me, a pretty conservative estimate right? I'm assuming that basically nothing shifts within software, right? The Pokemon game and those other games do nothing to stable the decline in software. I'm assuming margins don't improve in anything. I'm assuming no margin improvement sequentially at all. I'm assuming a very modest curve to the Switch 2, even though we know that historically these sales can run up pretty quickly, right? Year over year. And we know that the Switch 2 is only available for two of the three quarters in quarter two. So I'm assuming modest assumptions. And the only way you could come up with more modest assumptions is if you think that Power Packs makes even less than a 10% margin, which I think is very unlikely. Or you think that Ryan Cohen was literally lying about his statement that he made 3 weeks ago that the collectibles business is going to be just about a third of total company sales. Those are the only two options. And sometimes CEOs that are visionaries, take Elon Musk for example, can get a bad rap for making these declarations of what they're going to accomplish. And it's easy as an investor to say, well, we'll see, right? We'll see if that's really the case. Why would you take a CEO at his word? You know, he's probably just shilling for his company, right? Well, those are usually 1 year, 2 year, 5, 10 year declarations and projections. Hey, by in January, hey, by the middle of next year, we're going to solve for full self-driving. Okay, that's a little bit more gray area when Elon Musk is saying, we are trying to develop a technology and I'm going to try to tell you when it's going to be finished being developed. But by the way, it's not finished yet. Ryan Cohen's saying we have already developed this, right? It's already for sale. And I'm telling you that I'm looking at the numbers. And on October 20th, I'm telling you that this year it's going to be just about a third of company sales. There is no way to interpret that apart from it is doing hundreds of millions of dollars of revenue. What does this 220 and what does this 142 mean for GameStop as a business? Well, if you look at some of their metrics, one thing it means that gross margin is coming down, which is okay, right? But the only way that gross margin would not be coming down quarter over quarter is if you think that Power Packs has greater than a 30% gross margin. And I do not think that is the case. And I think Ryan Cohen clued us in his most recent interview that that is not the case. You can watch my video I made a little while back about my top 10 takeaways from the interview if you want to hear my rationale behind that. But what else does this mean? SG&A continuing to plummet, aka cost savings continuing to be realized. Not only are they continuing to close stores, but we know that they are continuing to begin experiencing the benefit of the stores that they have already closed in past quarters. In the quarter that you close it, it's a cost to close it, and it's not until the following year that you see that year over year cost savings really begin to hit. And so GameStop is hitting into a cost savings snowball that's being realized, whether costs are plummeting, but simultaneously, look at operating income. A 525% growth in operating income year over year, right? This 142 compared to a $33 million loss in quarter three just 1 year ago, right? A 500% improvement in operating income, a 1,162% improvement in net income, right? A $220 net income in Q3 compared to $17 million just 1 year ago. This is crazy, right? And if you look at the per store numbers, right, they are blowing up their sales per store, right? $25 million per store in a quarter in Q3, up to 60, right? 150% growth in their collectibles line, growing over 114% year over year. Some crazy numbers. And you're probably thinking, but how crazy are those numbers really? Is that actually impressive? And Okay, maybe the year over year numbers are impressive, but what about the total dollars, right? $220 million of income. I mean, how does that compare to the big dogs, right? How does this type of growth compare to the big dogs of Palantir? And plus, this is just what, maybe a $5 billion revenue business? I mean, what about the mega cap, right? The businesses that are worth hundreds of billions of dollars? Because right now, GameStop's only worth $9.68 billion, and that's despite the fact that they have 9.4 billion in assets, right? Really 10.3 billion in assets, but 9.4 if you net out their business liabilities, right? So they're trading below total assets, trading almost at cash value. Surely it's because none of these numbers are impressive, right? Well, let's just compare, okay? Because Palantir, in their most recent quarter, they say this was a phenomenal quarter. A phenomenal quarter. Obliterating metrics, year over year growth, right? So total company, 50% year over year growth in revenue. 50% year over year. And hey, also we have these smaller business, portions of our business are growing as high as 93% year over year. Well, we just looked at a company that their most important sub business, collectibles, is growing at 115% year over year. And meanwhile, their operating income and net income growing at 500 and 1200% year over year. So growth rates that are destroying Palantir's. Even if you were to take just the pure top line, what is that? 1345 in Q3 of 2025 minus the 860 from Q3 just a year ago. 45 divided by 860, 56%. So their total business revenue growing 56% year over year, exceeding Palantir's year over year revenue growth. And then if you want to take Palantir's darling child, right? US commercial revenue. I know, yeah, we Palantir, we've saturated, right, our government businesses, how much growth really is there. Well, we'll tell you where there's growth. It's in US commercial. See, look, 93% year over year growth. Okay, well, collectibles, 114% year over year growth. But what about the top line, right? Palantir guides for 2025 to do $4.1 billion in revenue. GameStop literally makes more money than Palantir in revenue. So their top line is higher than Palantir's top line. Their growth rates are higher than Palantir's growth rates. What is Palantir going for, by the way? Oh, 523 times earnings? 523 times earnings compared to GameStop if you net out their cash doing, oh, 0.52. 0.52. So, so 0.52 compared to 523, GameStop is literally 1,000 times cheaper, 1,000 times more affordable of a company to buy and they make more in top line and they are growing faster than Palantir. Is that not wild? Is that not wild? Now, Palantir, okay, their gross margins are higher because they're a software. So, of course, their ability to generate cash or to net cash from their operations is higher on a dollar for dollar basis. But what does that amount to? I mean, look at this. They have Palantir, almost $7 billion in current assets. GameStop, over $9 billion in current assets. Liabilities, they have 1.3 in all current liabilities. That's about 50% higher than GameStop's operating liabilities. And again, I've talked about the convertibles 1,000 times. If you want to talk about the convertibles, just watch my old videos. So 50% more and then, okay, so income from operations in 2025, they made about 270 million off of the billion that they generated in revenue in 2025 compared to, and then if you add in their interest income, a 328. So they made 328 in net income in 2025 compared to GameStop making 220. So okay, right now they have basically 50% better profit margins than GameStop. They make about $100 million more per quarter than GameStop right now, but GameStop is closing the gap. GameStop is growing even faster. But even if you want to say, well, because of the margins, I must I must value Palantir greater. How much greater? 1,000 times greater? Right? 1,000 times on a percentage basis is 100,000% more expensive for an earnings per share of 13 cents on a quarterly basis. Whereas GameStop has 447 million shares. So this 220 divided by 447, you're getting 50 cents, 49 cents of earnings per share in quarter three. So on an EPS basis, you are almost almost getting 4 times as much earnings per share than Palantir is, and you are closing the gap. Right? Or in this case, widening the gap. 4 times as much earnings per share, higher top line, higher growth rates on the top line, higher growth rates on the cream of the crop growth driver, right? The bull case, the next leg of growth case for the business, and far more growth ahead of it, right? GameStop just started this business. This is not even close to fully saturated. So the runway for this, right? The ramp to continue to expand this is massive compared to Palantir, right? Because the global demand for stores of value is massive, $550 billion right now, but compared to, right, 1.4 quadrillion in traditional markets, 150 trillion of that just in checking accounts, right? Just held in pure cash, right? So the underpinning demand for stores of value is huge, and PSA graded cards as a store of value that possesses competitive advantages to even within the store of value industry, the collectibles industry, it's massive, 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 massive. So what do you think, guys? Which stock looks more attractive to you from a valuation perspective? But regardless of your thoughts, I mean, isn't this just amazing to see a company? What's Palantir worth, right? So they trade at a 523 times earnings, and their market cap is 459 billion. $459 billion market cap. And all they can hang their hat on is 50% year over year top line growth. Isn't that crazy? EPS that's literally a fourth of GameStop's earnings per share. Cash and cash equivalents that's 60% of GameStop's cash and cash equivalents. And look, your gap net income, you have $100 million of wiggle room there, but not for long. Not for long. It's amazing, guys. It's truly amazing. Okay, I'm gonna wrap this video up soon, but I wanted y'all to hear a little bit more about my assumptions for Q3 to put it before you guys a little bit more succinctly. Also want to let you know I went ahead and raised this non-store SG&A by $5 million. You're still getting $219 in net income. By the way, as far as this Palantir conversation goes, we're basing this off GameStop's Q3, which is also based on power packs in the very, very beginning, right? The very first quarter they've ever been available and just in beta and just for Pokemon and football. They're adding in baseball and basketball and they're expanding the net user base that's allowed to purchase, right? They're expanding the beta and quarter 4 holiday sales, right? We know without a doubt that quarter 4 has a disproportionate portion of GameStop's earnings. And so, again, that $220 million of net income compared to a 330 for Palantir, GameStop's probably going to do more than 330 in Q4, right? Now, it doesn't mean they can do that in Q1 of 2026, but again, when you take the full year earnings, GameStop's total company earnings is going to look more and more impressive because they're growing at crazy, crazy rates. Palantir flexing a 50% here, a 92% there. How about 525%? How about 1,162%? We saw 400% and 1,000% in Q2, and we thought, oh, okay, well, there's no way they can sustain that. We saw 79% and 240% in Q1. We thought, oh, well, there's no way they can sustain that, right? They are widening the gap on their own ridiculous growth and outperformance quarter over quarter, and the drivers for it are in their infancy, right? The Switch 2 just started selling, and more importantly, Power Packs just just launched this quarter, just began beta, and the demand for it, I mean, the ramp is just incredible to see. All right, that's all I got for y'all on this one. In a coming video soon, I'm going to break down what I expect the balance sheet to look like after Q3. And then I want to go on a long project with you guys, really helping discover with you, research with you, and present to you what GameStop's margins really look like at a more granular level. Because right now we see hardware, software, collectibles, and then we just get this total gross margin number. But in the GameStop of old, right, you had new hardware, new software, pre-owned, which was hardware and software put together, accessories, digital, brands, collectibles, other. Not only did we have the sales figures for all of those different lines, we also got the gross margins for each of those different lines. So, all that to say, um, excited to extrapolate some things to have a more clear picture of what is making up these revenue numbers, what is making up these profit numbers, so then we can understand their total margins more accurately and begin projecting out future margins that much more accurately as a result. So, all that to say, again, thanks again, everyone who's a part of the channel. All the earnings go to DRS Book GME shares. So I appreciate it so much. That's all I got for y'all today. I will see you in the next one.